Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, what a Friday it has turned out to be for Dalal Street, or should I say Friday for the bulls, given the fact that the Nifty and Sensex have extended their record-setting run for the third straight day. In fact, the Nifty managed to hit 19,200 mark in intraday trade, and of course, the Sensex has, of course, edged past that 64,500 mark. So it was a double century by the Nifty, given the fact that it gained somewhere around 200 points or thereabouts. Among the sectoral movers, clearly it was the auto pack as well as the IT basket that was doing extremely well. So if you look at some of the gainers on the index, M&M, Infosys, IndusInd Bank, Sun Pharma, Hero Moto, TCS, Maruti, Tech Mahindra and the likes. And losers were few and far between in today's session. If you look at some of them, Adani Ports, Apollo Hospital, Bajaj Auto, Divi's Lab, Grasim, ICICI Bank. But if you look at the first, this also today also marks the end of the first quarter of FY24. So if you look at the entire 6 month as a period, the Nifty and Sensex have gained somewhere around 5.5% or thereabouts. And for the month of June, I think the Nifty is up 3.5% or thereabouts. So entire first half has turned out to be pretty good for the markets, given the fact that we have clocked fresh highs. Historically it shows that when you have a great first half, the second half turns out to be a little sluggish.
Correct.
But we'll have to wait and see how that pans out. But from the mid and small cap end, Yatin, any movers and shakers you want to point out?
Yeah, so I think a lot of stocks were moving in trade. In fact, Nifty, after the double century which we saw by a strong US GDP data, we have to clearly also see how really mid caps moved. So if you look at Nifty 500, it was the AMC stocks which dominated the gains, also Biocon, and they will be launching one of their blockbuster biosimilars in the US markets called Humira generic. And before the launch of that particular drug, the stock was up 8.5%. We also had Adani Transmission, which saw block deals, and we have recently seen the promoters of Adani Group sell their shares. Probably we'll wait and watch for the bulk deal data. But yes, Adani Transmission post the deal was down 6.5%, and similar were the declines for Credit Access Grameen after the promoters sold nearly 90 lakh shares in the company. If you look at the Credit Access, that also shut shop nearly by down 8%, and if you look at the percentage loss, that was close to 6%. So overall, yes, it was a healthy trading session. Some bit of profit taking in the broader markets, but yes, the large caps like Reliance Industries, IT stocks, to our surprise, were moving in trade quite strongly. In fact, TCS and Infosys, both of these stocks gained by nearly 2.5% each.
That's true, but if you look at the Nifty Realty and Auto Packs for the, on a year-to-date basis, both the indices have clocked in gains to the tune of 20%. Yeah. So clearly they have been leading this leg of the rally. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. Yatin, starting off with Tata Communications, even though, it did manage to recoup most of its losses, the stock was down somewhere around 4% in intraday trade, and it has made a US-based acquisition. There are concerns around how it will turn out to be margin dilutive for the company, but the company is pretty confident that it will help it achieve its a revenue target of 28,000 crores when it comes to data revenues. So it expects the data revenues to double by FY27. Now this acquisition that I'm talking about is called Kalera. It is a communications platform as a service. Now the company already has presence in this segment via its domestic arm Digo. So, but now it has acquired Kalera, which will help it to make inroads, deeper inroads into this segment. Now, it is betting big on this segment. In fact, as I was mentioning, it expects the data revenues to double by FY27. But, remember, it has made another acquisition last year, which was a video platform, video production platform, and it's called Switch. And the Street was, in fact, it did turn out to be margin dilutive for the company. Given the fact that the company has given a medium-term margin target of 23 to 25%, looks like Street is not very happy with the acquisition. But remember, Kalera had a consolidated revenue of $340 million. This acquisition has been made for a total consideration of $250 million, out of which $100 million is to cash consideration and $1.5 billion is the net debt that the company has taken. So Kalera, as I was mentioning, has a consolidated revenue of $340 million for calendar year 22. And it has, in fact, it saw a $15 million EBITDA loss, including ESOP costs and one-offs. So that's a bit of a worry coming in when it comes to this latest acquisition. If you look at the brokerages, they have IFL has downgraded the stock to reduce, and it has the target price has been set at 1,518 rupees. IFL expects 8% EPS dilution by FY25 for this company, and Motilal Oswal maintains a neutral rating target at 1450 rupees or thereabouts. It says any visible improvement in earning performance will, lay the road for some kind of a valuation re-rating for the stock. But if you look at the stock, it's up 20% on a YTD basis at a PE of 25 or thereabouts. It is lower than the sector PE, and remember, Rekha Jhunjhunwala has a 1.8% stake in the stock as well. It's a Tata Group stock. It has made an acquisition. Street is a little cautious given the fact that it may not be able to meet its margin guidance, but let's see how they manage to scale up their presence in this particular segment, which they are betting big on. So that will decide the trajectory going forward. Yes,
and the other stock on the focus was MCX. Obviously, Tata Communications recovered, but MCX was one stock which couldn't recover, on an intraday basis. The stock shut shop by nearly 9% in terms of the percentage losses, and Morgan Stanley has an underweight on the stock with a target price of 1125. Now, if you look at the MCX stock over the weekend and in the holiday, we saw some series of announcements. First, they had their mock trading sessions, which the company claimed to be successful. But to a surprise, to analysts, yesterday the company announced its agreement with 63 Moons by extending the services contract, which means that MCX will not be implementing the new trading software which it has been developing with TCS, and the implementation delay clearly has brought some nervousness in the stock. Now, if you look at the extension of the contract with 63 Moons, Morgan Stanley believes that this will wipe out the entire FY24 profits, and if you look at the FY25 profit forecast, it is expected to further see some downgrades given the fact that the implementation could be delayed, and more importantly, higher transition cost will weigh on the overall margins for MCX, and probably that is the reason why the stock of MCX was under tremendous pressure in trade today.
Right, Yatin, I think as a result of this 10% downtick in the stock, mutual funds have suffered quite a bit of a loss to the tune of 275 crore rupees or thereabouts. And if you look at the stock, even after this correction that we have seen, I think the PE is somewhere around 50x or thereabouts. So it's a little expensive compared to its sector PE. And if you look at the returns on a YTD basis, it's underperformed the Nifty, somewhere around 2-3% or thereabouts. So, we'll have to see how things pan out for this stock. But Yatin, what's your second pick?
Now, if you look at HDFC AMC and in general across the board, if you look at the AMC stocks, no news at the SEBI press conference was headline for the entire AMC company. Why? Because the SEBI chairperson said that the board of SEBI believes that they need to revise the entire consultation paper on TER, which is the total expense ratio. Now, given the fact that there was nervousness on the street with respect to the total expense ratio, which SEBI wanted it to be much lower, given the fact that they want investors really to get the benefit of scale which AMCs usually have, and AMCs being a high scale business, the total expense ratio could have been capped and that could impact their overall earnings. Now, SEBI in its press conference said that they would be revising the TER ratio mechanism, and they will be floating a new consultation paper which will be coming soon in the public domain. Now, there is a hope on the street that the TER ratio, there could be some further leeway or some headroom given to AMC companies so that they can probably spend some more money on taking research advice, or probably spending more on investor camps or advertising with relation to new fund launches, or to create in general investor awareness. Now, this news came as a positive surprise. Morgan Stanley believes that SEBI's move to release a revised consultation paper on TR is likely to be positive for AMC companies. Also, regulator expects the industry to be quite happy with the proposal, which means that from here on there could be some earnings upside versus a negative surprise on earnings for the TR ratio, which impacts most of the asset management companies, especially the ones which have higher equity AUM under their management. Now, if you look at Nippon AMC, HDFC AMC, UTI AMC, Aditya Birla AMC, all of these stocks were up anywhere between 10 to 15% in trade today.
Right, Yatin, I think reports are suggesting that the new consultation paper may come as early as next week. And if that happens, most of us could argue that, a lot of it may already be in the price and, people may look at some bit of a profit taking once that happens. Well, on that note, I also want to flag off the auto pack. I have spoken about how autos have done very well, but of course, we'll have to watch out for auto sales figures as well that will be trickling in tomorrow. For the likes of Maruti and M&M, I think they are expected to report an year-on-year growth of 8 and 15% YOY. But when you look at the two-wheelers, domestic sales are expected to be strong, but it's the export segment that will continue to remain weak. So we will be watching out for some of these auto stocks on Monday morning as well. Well, with that, I think we've come to the end of this edition of Closing Bell on a happy note, given the fact that markets have, of course, managed to hit fresh records on 3 consecutive days. We'll have to see whether or not we manage to continue with this momentum Monday onwards. Well, with that, it's a goodbye from me and Yatin. Thanks a lot for watching. But for all your other news and updates, stay tuned to Moneycontrol.